This conference will now be recorded.
All right, good afternoon, everybody. This is Greg Morton. It is Saturday, June 18th, 2022. This is the weekend video update for Canslim growth stock investors, brought to you by the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. First of all, happy Father's Day to everybody. Hope you guys have a great time tomorrow with family and your parents or your kids of which you are parents. So enjoy that and let's go. As always, this is for educational purposes only, not recommending any stocks or securities to buy or sell. There really aren't any stocks or securities to buy right now. All investing has substantial risk of big losses. We want to learn first and only then invest. And of course, Canslim is the system developed by Bill O'Neill between approximately 1959 and 1962 and is the registered trademark of Investors Business Daily. So today we'll look at the M factor, talk about what we see for the past 2 weeks, constructive action or destructive action, and hint the bear mauls all. So last 2 weeks have been absolutely brutal. I did not do a video update last weekend because it was pretty clear things were brutal, and my internet modem blew up Sunday night and I didn't have internet to put my slides or anything together. We'll look at a couple charts, and then I'll mention our educational monthly meetings as we had one of our big meetings this past week. So the M factor, this is the most powerful letter in the world, particularly for BMW drivers as well as Canslim growth stock investors. So as Bill O'Neill teaches, we want to diagnose, we want to interpret, we do not want to predict. We want to do a weather report, not a weather forecast. We look at three things: the action of leaders. Last time I did a video, I had in there very little life beyond oil and gas showing up. We can just scratch that out after this week, and it's just a bring out your dead market. Actions of stocks owned. Well, we are under 5% invested in the group teaching portfolio, and quite frankly, all cash is perhaps the best position now. And then market pulse, distribution day count, price and volume on the indexes, and the color and book tracking. So we'll look at those. So let's just go take a peek at the horror show. So we'll start in MarketSmith. So here's the NASDAQ. We'll clean up the chart first. So you can see this serious downtrend. We topped back here on November 22nd, even though the RS line had really been in a downtrend going back to last February. But this was the top for counting bear markets. As I view it, you can sort of see we're working on one big leg down there, second leg down here, and now a third leg down. We see very ugly market action, particularly these three daggers down. In fact, that happened on every index, just wicked sell-off on increasing volume, just plunging down. Let me turn these back on, see what we had marked up. So recently had a rally day there, it failed there, had another rally day Friday. We're down close to 35% off on the NASDAQ. RS lines still down here. All the moving average lines are up, down, upside down. They're stacked in the wrong order. We're just way far away from even the 10 and the 21 day. So just clearly mired in a brutal bear market that is now 7 months off the top. Over here on the left, it looks to me like the first leg was about 22.5% down in 17 weeks. Second leg was down 24.7% in 7 weeks. That's coming down here, and we'll see how this plays out and develops. Go to the S&P 500, same thing. There's those three daggers to the heart down days happened on all the indexes. Like I said, can sort of see one leg down, two leg down, sort of the same thing setting up. Now, clearly in bear territory, this line's 20% off and coming close to being 25% off. NYSE, there's the three daggers down, just terrible action, just, again, nothing constructive to say. Dow finally touching bear market territory, not quite 20% off, but working on it, the red line there. Russell looks bad. The only thing, it's not quite as far off as the NASDAQ is, which is unusual, but it is what it is. There's those three plunge days down, just showing super weakness. S&P 600 looks about just as bad. And if we go over to the coloring book, nothing real pretty here. I only have 4 buying days in our 25-day window going back to the orange dot and 11 selling days. So it clearly is a distribution dominant tape. We've had distribution recently. All the active distribution days have the little dotted border aligned around them. So currently we have 5 on the NASDAQ, 5 on the S&P 500, 5 on the Dow. On Thursday, we had clustering on all 4 indexes, which is 4 distribution days and an 8-day consecutive trading day window or less. So we had 4 and 7 days here, 4 and 6 days here, 4 and 6 days here. We've got rally days that are just failing as soon as they pop up. We have had 5 follow-through days on the NASDAQ, which have failed. There was follow-through day number 5. Have to look. I may have forgotten to mark the day it failed. And market school exposure is 0. We're in a power outage. Window of opportunities closed, and then the new high, new low indicators are both in red zone. Markets really got slammed the Thursday after the Fed meeting. You know, we had, I think on IBD Live, they said, referring to Wednesday when the Fed met, you know, one day doesn't make an uptrend. It really wasn't even one day. It was 85 minutes after Powell started talking was the only positive reaction there. It was wishy-washy all day and then just got absolutely slammed. Sometimes the day after the Fed meeting is really the most important day. So NASDAQ was off 453 points or 4.8%. Revlon filed bankruptcy. I had 1 stock on my up list, you know, and then tons of stocks on the down list. So market just getting hammered. Not much pleasant to say there. Pretty easy to read the tea leaves, actually. And then if we go to, let's see, the group teaching portfolio, like I said, only 4.4% invested, almost all cash. Looks like it's staying that way. At least for the next trading day, while things look this bad, off 11.7% year to date. The only thing left is a 30% of a full position size in BYDDF, and the stop that's set on that is laid out on page 2. So really just nothing pleasant to show you there. So we looked at that. Key observations, MMTS on all 6 indexes are red, like I showed you on the coloring book. IBD's in correction. Window of opportunity closed, actually slammed shut. Got high distribution day count with clustering. Got 555 and the distribution day count on the indexes. I think I had that right. And then if you didn't reset the count, if I just look in the 25-day window, I have 9 on the first 2 indexes and 10 on the Dow. So just heavy distribution. Market school exposure 0. The leading sector clearly had been oil and gas. Looks like that's the last trees in the forest. They really got whacked this week. The buy sell day count that I showed you, distribution dominant tape, high-low indicators are all red, still in a power outage. Those moving averages lines looks just terrible. A lot of work to go. Only 1 stock made the sector leader list in the paper, 2 made the IPO leaders, and the growth 250 is now the growth 134. So that's all that made the cut, even under the loosened up standards where they loosened up the screens in the growth 250. Mike Webster redid that for us and loosened them up. So the list is normally pretty full every weekend. So that's a really low number under the new criteria. If we were still under the old criteria, I suspect that would have been 75, which is as low as it ever goes. But that's still really low under the new criteria. So it's red lights. And it's this book Bill wrote actually after the 2000 to 2003 crash, where the NASDAQ went down 78%, the dot-com crash. So many people lost so much money. He actually wrote the second book after How to Make Money in Stocks. He came back and wrote The Successful Investor very quickly, right after that terrible bear market ended. He's working on that. which to me it sort of says, hey, what part of Canslim didn't you understand? Of course, he doesn't say it like that. He's doing it to educate people and to help them and to show, listen, our system would have kept you out of this mess. Read this book. So it's a good time to go read that one. Should be in your library along with How to Make Money in Stocks. Like I said, what part of know didn't you understand? The bear's just gobbling up any fish in sight right now. So do not feed the bears. Do not feed them your fiscal capital. Do not feed them your mental capital. They will eat everything you give them and come back for more. So it's just very, very dangerous out there right now. And in fact, the big advantage that we all have as individual investors is we can be not invested. That's the thing we have. The mutual funds have investing mandates, 95% invested at all times. Where are they going to go? Wouldn't you hate to be forced to put 95% of your hard-earned investment capital in the market right now? I mean, you're just trying to lose the least. Hey, how about lose nothing? Go to cash. So don't squander that advantage. Some things to keep an eye on as we go forward. Are we going to have a solid third leg down with capitulation and fear? And this easily, this could drag out all summer. In fact, it could drag out into the fall. October's, we could drag out longer, but I don't know, that would be predicting. But, it could go into October, which is typically a bad market. Maybe by November, the Fed becomes a little bit more dovish. Maybe the election result in early November is a catalyst to change the market. Who knows? We'll just have to watch and see. But this thing definitely could keep grinding down. I mean, the 2007 financial bear went down, I think it was 57% or 55% on the NASDAQ. So, and we walked through that one at our meeting this week. So looking for extreme fear, put call spikes, maybe a VIX spike up above 40. Sorry for the typo there. We do not have any prior tech growth leaders still standing. I think Apple and Tesla were the last two. They've broken down. They were the last growth stocks, trees in the forest. Average bear market is 9 months. We're 7 months in. August 22nd would be 9 months, but .com and financial bears went longer. We're in the dog days of summer, low volume, higher volatility. Those days are here. And then the charts are just totally wrecked after the last 2 weeks. I mean, you need to look. Can you find any stocks that are forming basis? And we'll look at a couple charts in a minute. There are some. Oh, next slide. So go back to Market Smith real quick. These are few and far between, but here's a couple that maybe could set up or are setting up. So this is SQM. Look at the weekly charts. So it round trip, this gain has come back, found support at the 50-day, 3 weeks down in a row, volumes dried up. So now can volume stay dried up? Can it form a bottom and can it form a whole new base? It needs work like everything else, but this is one worth keeping an eye on to see if it can put in that work. Li Auto, looking nice, Chinese stock. We always are concerned about their financial accounting, but triple-digit earnings and sales in the EV space. And then the cousin to them is BYDDF, also set up nicely. Nice stage one cup, deep, 48%. So that's excessively deep, but we have been in a bear market. RS line looks great, so maybe one to keep an eye on there when the market gets better. Halo, kind of got a horizontal trend line, forming a little handle, support at the 50-day. Maybe one to keep an eye on. In phase in the solar sector, seeing a little life there, got a double bottom base. Holding up, RS line looks okay. Harmony, that's just kind of V-shaped, but I still put it in there and kind of pretty deep at 39%. But there's its all-time high. So watching and good earnings and sales. So again, these are not buy reviews. These are, hey, charts to keep an eye on to see if these get whacked too, or if they set up constructive entries once we get back to a better M factor. And then here's TAN. This is an ETF. Of course, if it was a stock, you'd have a lot of overhead supply. It does have this uptrend, and we've seen some strength in the solar sector. So maybe that's an ETF to watch. So there's just not very much out there. Those are mainly the ones I could pull together. I have one or two more to look at in my weekend routine to see if anything gets on a watch list, assuming we could get a breakout, a rally day and a follow through day, and market's just looking bad. So other things to do that you ought to be doing now. Number one, Ali Coram just did a very nice interview with David Ryan on Friday. It's on her YouTube channel, so just look for it under her name on YouTube. It's only about 30 minutes long, and David talks about how he prepares, what's his routine during bear markets, how does he get ready for what's coming, because we're going to have a really nice time come. We just don't know when it's going to be. Investing with IBD podcast this week had Vernon, I think it was Bice, I hope I spelled that right. He's a portfolio manager at Lord Abbott, so he covered some nice stats on bear markets. And of course, Lord Abbott is a Canslim growth stock investing shop, kind of following what Bill and Neil taught. And then our monthly online meetings. So we met this past Tuesday, went over the M Factor, had some good nuggets from IBD Live and Market Smith tips and tricks that we went over. Looked at my rally day, follow through day watch list right now, which is even shorter. It's kind of those stocks I showed you tonight were some of the main ones. And then spent a lot of time looking at the 2000 to 2009 bear market. In fact, we walked through it day by day. We clicked through them faster than I did when I was studying it myself, but we still went through it, and it just wore me out. It's like going through the bear market again. And you're like, okay, this has to be the bottom of leg one or bottom of leg two. And it's like, oh no, we got 3 more weeks before we get to the bottom of leg two. So it's just, it really was a good exercise, I think, to go through. And I think that's a good bear market to go study. That's the most recent big one. The COVID bear only went down like, well, I guess it's about the same. Seems like it was about 34%, but it was like 30 trading days or 34 trading days. It was so fast and so swift, and the Fed threw so much money at the market that it's not really a good precedent. And then the 2018 bear market, fall of 2018, was only like 4 months long. So we haven't had one of these real big ones that goes longer than 12 months and goes down over 50% in a while. So I think this one's the one to go back and study, along with the 2000 bear, as well as the 1982 bear market period, because that's when they were fighting inflation. And we looked at the EV space, the cousin stocks, looked at the group teaching portfolio. So all that's out there. If you didn't attend the meeting and that sounds helpful, those can be ordered. Our next meeting is, I put June 14th, sorry, it's going to be July 14th. It's right on the website. We'll look at the M Factor. We'll do the same stuff we normally do. We'll continue looking at that 2007 to 2009 bear market. I'm putting some more information on the charts. So we'll deal with that. And of course, we'll spend time on the M Factor and other stocks setting up. And we'll do the follow through day, the watch list right now, IPO market if anything starts happening. And I may put in another educational topic. So here's a list of prior meetings. You can look through those. If you don't have a set of written sell rules, you ought to be doing that now. We spent 3 meetings covering that and teaching that. If you don't have a good weekend routine, September and October meetings from 21 went through that in great detail and how to build a tiered watch list. And then I just showed you what we covered at the most recent meeting. So you can send me an email if you're interested in ordering those. They're $15 each, but includes the slide deck, the recording, and any links I sent out after the meeting, things we talked about during the meeting. You can follow me on Twitter. You look at the YouTube page where you're watching this. There's weekend reviews on there, teaching on how to use that group teaching portfolio spreadsheet. There's one of our old meetings in full, 8-week hold rules on there. And there's a video I did recently on the difference between a bottoming base and a bottom base. One is buyable under Canslim and one is not. So that's it. You guys have a great weekend routine. Have a great Father's Day, and I'm out of here.